presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate you growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN Friday afternoon, 3 p.m. Eastern Time, final hour of the trading week. And we got markets trying to go green right now as I speak. You talk about clawing it back. We're a good 56 points off the lows right now, even more. Taking that tail low, you were as low as 58.53. Yeah, what is that? 47, 57. 63 points, 1% off the lows in the S&P, just like that. We're coming right back to where we were, and you talk about a technical high right where we were before all the fun began this morning at 8 a.m. with the first tweet talking about China from the president. You get back up there at 10:30, and we're right back up there again. You talk about a two-way market. Man, we get the S&Ps nonetheless, only negative by 5 points right now, trading at 59.17. NASDAQ 100, not quite back up to that level like we see in the S&Ps. NASDAQ 100 negative by 0.3%, or 66 points in the red, 21,342. How about the Dow? Above those highs. The Dow up by 0.2%, up by 83 points at 42,350, and the Russell negative by 3 points. Pretty critical area technically as well for the Russell, sitting right there at 2,074. Bitcoin pulling back from its highs, off about $1,000, trading at 105 grand and $310. Crude, as I mentioned at that update, 59 handle briefly at 12.30. We've clawed back some of that at 60.72. Gold off $26 right now at 33.17. We briefly got a 2,900 handle. Check that out on gold, briefly under 3,300. And you back that up in gold, just chopping around two ways this week from about 32.80 to 33.50, the upper boundary. And you check in on yields, the all-important yields going on right now. We get the 10-year at about 4.42, 10 years at 4.42, and we get the DXY sitting at about 99.33 off of the highs of 100. And yeah, gold down about $26. You jump over to silver right now, down about 32 pennies to 33.09 for silver. Check in on copper briefly. Copper trading at 4.69. All right, some of the movers out there. Tesla, yeah, down about 2% right now. How about Gap? Right, down 19%. Some of the movers out there. My goodness. You talk about it. Especially on, you look at Abercrombie and Fitch. Right, they accelerate to 105. I was talking about them Wednesday on the morning program. Their Hollister brand just growing exponentially. And then you jump over to Gap, and boy, that is a tough week indeed. From 28, you're trading at 22. You're down 19% for Gap right now. All right, we jump over to the story of the day. So the tweet begins at 8 in the morning. Trump accuses China of violating preliminary trade deal. So much for being Mr. Nice Guy, Trump wrote, etc. as it goes. Let's try to get the exact one up there. There it is. Has totally violated its agreement. So that kicks things off. Then you get that the U.S. plans a wider China tech sanctions with subsidiary crackdowns. Okay. They're going to broaden the restrictions on China's tech sector with new regulations that would impose U.S. government licensing requirements on transactions with companies majority owned by already sanctioned firms. That makes sense, right? If they're majority owned by a majority sanctioned by a majority owned company by an already sanctioned firm, yeah, it makes sense. And then you get the wraparound where it goes, Trump now wants to speak to Xi, and they violated the big part of the agreement, but he expects to speak to the President Xi and work out the issues, but tensions are high, right? I'm sure I'll speak to President Xi, and hopefully we'll work that out. So there's always like good cop, bad cop in the mix, and the market reacts. And that's where we are. You check out some of the volumes right now. On the S&Ps, we're going to get some volume today, I imagine. We got 1 hour left to go on the trading day. But you're talking about the last trading day of the week and of the month today. Okay, you're coming in right now, and we've done about 1.15 million shares contracts on the S&P. And we got a full hour of trading. And it's been a roller coaster of a day. NASDAQ 100, you jump over, 455,000 contracts so far. Above where we were Wednesday, but we got some work to do. But we probably will. We'll probably do 100,000 in the final hour. When you add in the monthly totals as we're coming into the end. So this is going to be an important day. Now, on a more broad perspective, risk reward wise in this market, right? You have volume off the top here yesterday. Okay, that's the most volume we've had since May 21st, which was volume off the top as well. Those 2 days are the two biggest volume days since you accelerated to 21,000 on the NASDAQ 100, which was May 12th, 18 days ago. Since then, the only 2 days with volume are the selling of May 21st and the selling of yesterday. And we're probably going to get it today as well. And look where we are. That zone we've been talking about that we traded from February 27th to about March 17th, just massive volume. Haven't seen anything like it since the lows around April 4th. S&P, pretty similar action. Right to the top of this range, which is at about 6,000, right where you began, February 26th, February 27th. You trade lower with sustained volume of about 2 million contracts. And again, I know I've been talking about it a lot, but boy, there's no such thing as coincidence, as they say. It's an art, not a science, folks. Doesn't mean the market can't just pull some animal spirits. We get some good numbers, AI productivity across the board, and you blow past it. But technically, this is a very difficult area for this market right now, and it's correlating to this massive selling wall from late February coming in to March 16th, and that's right at 6,000. And we haven't done more than, 1.7 million contracts since April 10th. We were doing more than that every single day for 3 weeks. And that's the wall of volume that we're trying to get through right now in this market, and they can't do it. So pay attention, because risk reward wise, you check out the NASDAQ 100. And yeah, you're talking about an area that we have a top side here of 21,858. So yeah, you got 2.5% to the upside. But man, the pressure when we're over this line here, and we got a bottom boundary there of about 19.5, and we're sitting at 21,300 right now in the NASDAQ 100. All right, we check out some chip stocks. Talking China, NVIDIA. Yeah, they don't want to hear that. Down by 3% right now. NVIDIA shares to 135.08. You jump over to AMD. Down about 1.9%. Dell with their numbers after the bell last night. Little volatility, 2.2% to the downside right now for Dell. Some of the other tech stocks, look at Oracle, up by 1.4%. Salesforce down by 1.1%. Amazon shares down by about 0.4%. Stay tuned. We'll come right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks, and just like that, we got markets going green. S&P's positive by 1 point right now. We got a green bar. We'll see. Man, you ever get a rip-roaring rally with volume above these highs? Watch out, folks, okay? I know I've been bearish to a certain degree, just jumping around, but boy, you take a look at that thing on a daily. All right, and what are we talking about here? I mean, we got 42 minutes left to go in trading, and we got a market that's pushing highs right now. And we got the last day of the week and the last day of the month right now coming around. And boy, what a green bar that would be, right? If you were able to get up to about, 5,900, 6,000, something like that to the top of the range on volume. See, market's making an effort. Dow up by 125 right now. All right, you jump over to the journal, talking about China, of course. And yeah, rare earths, it would make sense, right? So much focus on them, how we need China, all that part of things. And yeah, that's at the heart of the agreement. That's a big problem right now. Rare earth exports, centered on Beijing's promise to speed critical mineral export licenses, is what they're talking about. People say trade negotiators presented their Chinese counterpart with the demand that Beijing resume rare earth exports. In return, the U.S. would agree to a 90-day tariff truce. Yeah, since Geneva, however, Beijing has continued to slow walk approvals for export licenses for rare earths and other elements needed to make cars, and that's what the beef is about. Totally violated the agreement. Maybe they have. And now they'll face the wrath, right? And the market faces the wrath to a certain degree, and then you get a reprieve that they're hopeful for a conversation. It's always in the details, right? Which is why these take so long. And of course you can't trust China. So how does that play out? And where does that leave us? And is there a shock possibility again? That's what I found myself trying to figure out today. We think we've come out of the complete doldrums, right? In terms of a worst case scenario completely avoided. We found out that no, the S&P doesn't need to be trading at 4,800 right now or 5,200 with a disastrous tariff approach. No, it's much more, well, guess what? Maybe it's not much more reasonable, because maybe it is going to be that difficult and really it's going to become a trade war. That's been the fear from the beginning, and you see these details play out. And so look at the risk reward is what I would encourage you to do in this market right now. Doesn't mean we can't plow higher over this. We'll see today as you claw it back, right? But boy, very difficult to see how China meanders this one in the crosshairs. So Trump has further tightened export controls on those high-tech products. Yeah. And it just goes on and on. All right, let's talk a little bit of Google. So, how about AI in the Google Justice Department district court battle that's going on, okay? The first question to the government focused on whether curbing Google's position in generative AI was a fitting way to address the company's dominance in search. Does the government believe there is a market for new search engines to emerge as we think of it today? He asked, do you think somebody's going to come off the sidelines and build a new general search engine in light of what we are now seeing happen in AI space? And the Justice Department says, yes, that's it. There's probably going to be somebody else that comes in because of AI. We do believe that these remedies that will be proposed will allow opportunity to occur, generative, and are so focused on that AI. Yeah. AI chatbots, right? I do it myself, folks, all the time. It's remarkable how often I use Google now. I'm talking about, building in just as something as simple as saying, show me some ideas of different housing ideas, right? Different designs, different roofs to build. You're talking about gable roofs, hip roofs, all of this stuff. That's something that you just used to go to Google for. Show me Google Images. I don't even do it anymore. I get super specific and tell ChatGPT what I want, and they do. Yeah. And this is where it gets deep, right? So these are the types of deals that the government comes after them for and probably should. And you see it unfolding, and hopefully they do, because we're on another forefront here in the same likes of there's going to be plenty of companies out here like OpenAI, Perplexity, Anthropic, right? All these companies that are going to try and buy each other and stifle competition as they grow. As the trial unfolded in April and May, some representatives from AI companies told the court they're already being stymied by Google. Perplexity testified that Google's contract with Lenovo's Motorola blocked the smartphone maker from setting Perplexity as the default assistant on its new devices. Motorola cannot get out of their Google obligations, and so they are unable to change the default assistant on the device. I would come back and say, well, what kind of obligations? What are they getting paid for? How does it, that's how it goes. But you can see how it happens. And yeah, if you're talking about the AI, that's a threat to Google, because that's where the future is. You see it. Talking about this week with Google VO3, been talking about them a lot, that video creation tool. But you see the reaction today in Google, right? Well, even Google's getting a bag. Look at this one, man. Up by $3 off the lows to 171. I might talk too quickly as Google clawing it back with this market with the Dow up 124. UNH catches a bit, up by 1.1% right now. We jump around to some other retailers. Walmart, there you go, up by 1.7%. Target shares down by 0.5%. Kohl's up by a percentage point. Quite a pop for them yesterday, and then a give back, right? Boy, can you imagine being in Kohl's yesterday? You're riding mighty at almost $10, and by the end of the day, you're at $8, right? You actually end up a loser. TJX flat today. Mickey D's up by 1 percentage point. All right, and this is an interesting one because you're going to have the House bill coming up. It goes to the Senate. They get some big problems there in the Senate as well. But I hadn't even heard about this one. It's always like the details, right? So the SALT fine print is in focus. The SALT deduction has been a big one, of course. And it's interesting that actually what happens is this is going to focus on many businesses. And I wonder how that plays out in the press as this becomes a big battle. And then you get the small business, lobbyists, whatever you want to call it, right? And so where this comes in is a key subset of rich Americans, okay, are going to be excluded by this deduction. If you're in the wrong industry, okay, two complex provisions that go into it. One would make the qualified business income deduction even more generous, okay, and the other would tweak the cap on deducting state and local taxes. But yeah, with a higher limit but more restrictive, okay? And this comes into specified services. and it can go all the way from Hollywood to pharmacists, physicians on Main Street, legal and financial firms, okay? The bill would boost the SALT deduction of $40,000 from 10, but it phases out above $500,000 in annual income, okay? Now, where this gets even more interesting, though, is business owners in most states have not actually needed to abide by the SALT cap because of a loophole, okay? That loophole is now closed, though. So you get a SALT increase, and then you have the business owner's income is, you can't loophole it, and you're the one getting paid, and anybody over $500,000 in business income is going to end up paying SALT, their state taxes with no deduction. We'll talk some more equities when we get back, folks. Stay tuned. We'll talk a little Tesla. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
welcome back, folks. Market's jumping around. S&P's back to negative by 1 point right now. Quite a roller coaster. We'll see. About 30 minutes left to go in the trading day. We talked some retailers. Quite a day for Walmart, right? Walmart up by 1.7% right now. And you jump over to retailers, and Walmart said it, right? Walmart wasn't shy. They said price hikes are here. Have you seen them? They're here. If you haven't seen them yet, they're coming. That's what their CFO said. I might have paraphrased a couple of words. But literally, the Walmart CFO, I don't even remember the gentleman's name, something like, if you haven't seen the price hikes yet, they're coming. They're coming this month in May. That was about a couple weeks ago. And what this article is talking about, the Journal, is a great one. I'll post this one in the den. You know what? I don't want to waste one of my free gifted articles because it kind of speaks for itself, okay? But it is remarkable when you look at the words that they're trying to use besides saying that we're raising prices, okay? Retailers flex their vocabulary to warn of potential tariff-driven price hikes. They don't want to get the wrath of the president. They don't want to come out on their... what happened to Walmart when they did that, right? Imagine, all they do is they come out. This is where, all right, this is... Executive has used a barrage of modifiers to minimize the shock of the price increases. A couple of them. Best Buy, they're going to adjust their prices by making strategic decisions around promotions. Decker's Outdoor, they're going to flex their pricing power. Okay? TJX, TJ Maxx, one of my favorite companies. We always talk about the uptrend channel in TJX, folks. It's going to shift its prices in tandem with traditional retailers while trying to avoid the word price. Yeah. If retailers do move out there, we will adjust our retails to preserve that gap. That could mean they go up on certain items. Is that English? Did I just read English there? If retailers do move out there, if retails do move out there, we will adjust our retails to preserve that gap. That could mean they go up on certain items. Do you know what else he just said? He said, if our cost of goods goes up, we're going to raise our prices. Nonetheless, and there is Walmart. All right, I didn't even make it down that far, right? The higher tariffs will result in higher prices, period. Yeah. And then Trump said that they should eat the tariffs. But that's not how commerce works in general. Yeah. So, nonetheless, as we make it through earnings season, it's been a strong season. We got some strong data out there. No denying that. But pay attention to some of those verbiages as they come out, because everybody is ever so delicate with the words for obvious reasons. And yeah, Elon's done. He was at the Oval Office, and it is remarkable, right, that, the Times is in the crosshairs, folks, but nonetheless, these stories are amazing, okay? He's the richest man in the world by far, and the ketamine deal is real. He's talked about it, that it's real, and, ketamine, and this isn't hating on it, okay? There is massive amount of research, folks, when you talk about whether it's psilocybin, right? I think that's how you pronounce it, the medicinal in psychedelic mushrooms, okay? So, and then ketamine to a certain degree. People say you take it in a certain dose, right? It can, whatever it can help with, okay? But maybe I'll gift this one. And I know the Times has their haters for the presidents, but man, it's remarkable. We live in interesting times, folks, okay? The richest man in the world is living in the White House for a while, hanging out. He's doing ketamine. He's doing mushrooms. He's doing ecstasy. Hey, why not if you're the richest man in the world? No, I kid. All right, be healthy, folks. Drugs, what we have going on with drugs. But nonetheless, they're talking about ecstasy. They're talking about mushrooms. And yeah, I'm sure this is, the New York Times gets derided by the administration, but all good journalism gets in the crosshairs of people who want power, folks, and that's what happens. But boy, especially interesting when they pop it, knowing he's going to be on the campaign trail, right? So it all ties in. Oof, but boy, the life of Elon, man, right? But he's back at Tesla. That's it. We'll talk a little Tesla. He's back at Tesla. The China deal's a worry. You see that escalation on the China deal, just like everything else. And Tesla's down about 2% right now, but it's been a heck of a month. It is. We take a look at the volume on this thing. Let's put it on a weekly. take this off for some clarity here. And that bar is going back to the highs of 2021, folks, which is remarkable, right? That we're sitting at, you're talking about 4 years of consolidation for Tesla. So you want to make the case that Tesla can trade higher? Tell somebody it's been building cars for 4 years, you know? And that's not quite building cars, though, right? You touch that area again. Maybe we get back up there. But building cars would be holding the line a bit. Building cars isn't trading back down to 100 on a couple occasions. All right, on a monthly basis, we're going to be a little light versus the last two. Even on a big month, you're going to do about 2.2 million shares of Tesla. We back it up on a 5-year weekly. Yeah, see, this is worrisome, okay? This is a perfect one, folks. If you have time in the trade and you open the page on quality volume, okay? And listen, the animal spirits are alive. I'm not telling you to short Tesla right now. We're not short Tesla in Market Insights, okay? But if you're looking for risk reward in a market, look at the volume on the way down. Look at the volume on the week of April 21st, the 28th, your May. Every week we're going lighter volume, and this is going to be the lightest volume week we've had since April 14th, and this is going to be the second lightest volume week we've had in what, over 3 months or so? That's not the kind of strength you want to see when you break away from a low, that the volume just trails off lower and lower. But this market's on fire right now. As I said, we got 23 minutes left to go in trading, and we're making a run, baby. Look at it. Session highs. Session highs in the S&P right now. All right, we're going to get an interesting 22 minutes left in this market. And, man, you ever get up to 6,000, that would be a strong finish. And what would that do with us on a monthly? Boy, you want to talk about it. Look at this monthly. Oh, look at this. So you're talking about, could you imagine if, now we're going to do it on such lighter volume though, but on a weekly basis, you just saw what the volume's looking like. And yeah, you're talking about bumping up. Boy, 6,000. You'd go all the way over the bar from March as well. And we're going to be light on the weekly, but remember, we're dealing with 4 days here, okay? And so that's why I say the volume's a big number right now, because we're dealing with 4 days a week of volume this week. It's a shortened week. So what you do is, folks, if you ever have a 4-day, okay, you basically multiply it by 5, divide it by 4, you multiply it by 1.25, and yeah, you're going to deal with a number that's going to be about 2.5. You're going to have big volume this week. We got 22 minutes left, folks. Don't go away. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. You jump over to some other equities that are moving today, and yeah, how about Costco, man, right? I heard today, I was listening to Bloomberg at one point driving around, and is it right? I think it is. That you're talking about something? Yeah, it's going to be like a 23%. I don't know how you go back to a low of negative $33 per share, but you're talking about like a 23% return compounded, something like that. But yeah, it makes sense. No matter how far you go back, this thing is just on a trajectory higher. It never stops. And even you go back 10 years ago, and yeah, you're almost at a 10 bagger. You go back 10 years before that, and you're at like a 20 bagger. Whew, my goodness. But Costco, you're up by 4% on their numbers. We pull it over for their earnings. And yeah, you give back a number, but pulling it down, $428 versus $424 a share, and revenue $63.2 billion, basically in line. Net income for the 3-month period, $1.9 billion. You know what's remarkable here is that their earnings per share for 90 days is $4, okay? Now, this is why they're trading at 1,000. But imagine. So that would mean you multiply it by 4, they're making $16 a share a year. And it varies, of course, quarter by quarter. But that's what the whole company was at even, I guess 20 years ago. You even see the multiple, right? This is still, look at how remarkably strong you've grown. Yeah, either way, they're making a lot of money. They're making $4 and change, but nonetheless, Costco up by 4% right now, and yeah, Walmart up by 1.7. Compare that to something like Walmart. It's not even close, where you go stagnant from 99 to 2015. And this is why you want to be diversified, folks. If you're in retirement, you're in something like that. Listen, if you're in Walmart, and Walmart is an outstanding company, all right? They got technology on their side. They're dominating groceries, retail. When everybody's price conscious, Walmart's delivering on prices, etc. But you're dealing with some lofty expectations, and you just, multiply the price of the share 5 times in a period less than 10 years. And even a company that's great like Walmart can have a 15-year flat period from 1999 to 2015. Well, look how crazy this is, though. Even the NASDAQ 100, I was going to say, boy, you talk about it, man. It's just the whole market. Even if you're diversified, you want to be diversified with some fixed income as well. Because look at that. In Walmart, you had a 15-year flat period, but you really never lost that much money from the highs. The NASDAQ 100, you had a 15-year period to get your money back, and you went all the way down to 800. But not Costco, man. Yeah, they really ratcheted up. They held their own from it was a tough period across the board. Look at how the best equities out there, I know I'm deviating, but in that 99, 2000, look how well Costco did during that. You think we're coming into some bad times? Maybe you should load up on Costco, man. Because looking at that chart, you look at the tech stocks, you look at this company, Costco, and then when you really started to come out of it and the market accelerated, look how they really reaped the rewards. up to 80. Remarkable. And now we're sitting at more than tenfold from there. Whew. Could have bought Costco for $18 in 2010. 18 bucks 15 years ago, and it's trading at 1,047 for a company. And that's where, here's the great part about a scenario like this, right? You look at that and you say, well, there's equities that go through the moon all over the place, okay? And there are. But they're not usually as well established as a company like Costco was in 2010, right? They were doing big business back then, nothing like what they're doing right now and bringing it to the bottom line, but they were. And even from that point, you're talking about a 20-bagger. And I'm not cherry picking when everybody was going bankrupt, okay, or whatever's going on here. They got some funky prices of negative per share. They probably split so many times. But nonetheless, Costco, big numbers today. We jump around to other equities on their numbers. Alta. Yesterday the story was Elf Beauty buying Hailey Bieber's brand for $1 billion. I'm like, man, this makeup business, right? And influencers, but hey, it makes sense. They have control. They can get people to buy product, and it's just that simple. And Alta, boy, you talk about it, up 11.4%. Now we're coming up to this 500 area. We've got over there in 2024. You got over there as well in 2023. On a weekly basis, you're going to have some big volume. You're getting above where we were at the beginning of the year. And really, the next thing up there is the top of this bar, which is at about 529, which is the week of April 1st on Alta. Back it up even further than that. Yeah, there was the time this thing just never went down. I think it was probably when I was doing the show with my dad, 2014, 15, 16, 18, we pulled this thing up, and it was like every day. And you went from $50, $70, all the way up to $300 in a couple years. But looks like we're going to be on our way to test the highs yet again. And yeah, they crushed it, man. They raised their annual forecast and upbeat quarter on resilient demand. So people aren't suffering that bad. They can find money for the products they want, right? Yeah, we pulled up Gap earlier in the program. Whew, talk about a chart, man. Can you imagine when Gap's just crushing it in 1998 when I'm 8 years old and everyone's wearing Gap khakis or whatever they're wearing, and Gap is trading at the same exact price you're trading at 27 years ago. The amount of brands they own under that umbrella, everything. All right, jump over to Palantir. Yeah, up 5%. All this thing does is go up. Look at the volume on this. Strong volume on the week of May. You pull up a lot of charts in April and May. You pull up a lot of charts, and the March and the April volume are going to be a much bigger number than we are in May. This is going to have some decent numbers. You can barely see a pullback in this equity, Palantir. The story out there is that they're going to begin compiling data on U.S. citizens, expanding their robust dealings with the government as the Trump administration has tapped them to aid in compiling data on U.S. citizens. Up by 5% on that number. All right, we'll check in on yields as we come towards the end of the week. Yeah, recoiling a bit. A little bit of lower yield coming at you. Well, we now know where the lower boundary is. It's about 109.5, right? Like 109.15. The lows of April 11th. The lows back here in May 21st. We've bounced a good 1.5 from there. 110.27. And the upper boundary is about 112.20. Volume's been dropping off a bit on the 10-year. Yeah, just under 100 right now on the dollar. Check in on the dollar yen. Oh, sorry. USD, JPY. Yeah, you talk about some volatility, man. All right, let's check it out. Right to that 618, right? Dollar yen, trading right near 144 from 142 Tuesday, from 146 Wednesday night. One more segment, folks. Don't go away. I'm coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&Ps right now, negative by 5. NASDAQ 100, negative by 42. We're just off the session highs we made in the last hour. Quite a little roller coaster in the markets. And yeah, we jump over to some of the movers. Gap shares down by 19%. We check out Tesla shares. Prone to the China volatility as, Tesla, a little bit of selling. Coming into the lows of the session for Tesla, off about 3% for Tesla shares. NVIDIA shares in the red as well. China woes, off by 3.2%. AMD off by 2% as well. Oh, look at Intel, down by 3.6% for Intel. Jump around to some of the Magnificent Seven to round out the week. Amazon claws back some of the losses intraday, only off about 0.2% right now. Microsoft up by 0.3. Google. Ooh, look at that Google chart, man. Up by almost $5 off the lows. Google goes green. Let's check out Google. I'm going to have to check out that VO3. Figure out a way if I can do it for free. If anybody knows how I can try that Google VO3, maybe let us know in the den. Or, let us know in the den. Email me at tommy@tfnn.com. I appreciate it. Because that is That's the future, man. That Google VO3 is the future, period. And Google, quite a clawback of losses from today, and you turn positive, up by 0.2%. There you go. All right, folks, thanks so much. And yeah, so Jacob, he's not with TFNN anymore, unfortunately. We wish him the best. He's all good. He's on his way. He's pursuing other endeavors. And so I'm going to be hosting the afternoon show. And what I'm going to do is we're going to put things together. And I'm going to do the morning as well, probably, and bookend it. And we'll get some other guests. And we're going to have a lot more guests. And we're going to get the call-in lines open as well. That's what we're working on this week. And so, yeah, I'll be coming back on the afternoons is the plan. We'll be talking to our man Tim Ward Tuesdays and Thursdays. We'll get some other guests lined up, and we'll hopefully fill those slots with some hosts as well. But I look forward to it. Morning and the afternoon, just like my dad was doing. I get it now. He was doing 3 hours at a time. Man, remarkable. But I'll be doing 2, and we'll go from there, folks. I appreciate it. I'm coming back for the update, and have a great one. Thanks, folks.